Hello to you all. Welcome to the full explanatory and guidance video for the Calculus version 4. I have to make a video for this update because it's a huge update and I want to explain all the new components which are inside and how to properly use them. So yeah, let's get on with it. As you may know already, the Calculus is a volatility system designed for big period of time frames. However, I find out that some clients are actually using it for low time frames like 30 minutes and 1 hour. Although for my own taste, I like to use it more with big stable coins like ETH or BTC with 3 and 4 hours. And as you may know, this product was being released more or less around fall of 2020. And since then, the main volatility logic is still intact, it's still the same one, and it can serve us as a nice, forward testing, I would say. And on top of that, I would say that the main issue that we had, and I believe in the future, unfortunately, is still going to be due to these big time frames that we are using, when you have a sudden change in the direction of the market, it may be slower, than normal. So because of this, I try to put into effect, some new standards into it, and I hope, they are going to improve by a huge margin, the delay on these trades. And also I'm giving the possibility for those people that want as well to take the partial profits and calculate, how it would affect if you will take a partial profit. And let's say, for example, if you want to move as well to the break even, stop loss after you will do that, or stuff like that. So yeah, let's get on with it. So in this case, we can see that now at the same time we are going to have two logics in one. If you want to use just calculus, you can do it just like before. You are going to use the calculus logic only. If you want to use dominus, but from dominus I only took the main important parts, which is going to be the moving average and the oscillator reading and the sideways, and in this case for the sideways I took the Bollinger Bands, but it's the modified version that I have. So yeah, so in this case, for example, you can go with only with the dominus settings. These are more close to swinging than with dominus. Or we can go, which is what I want and what I like, for now. We're going to use both calculus and dominus logic. Depends on which one is going to come first. So we are going to still have the same, logic calculus entries. But look, for example, this one here. You would see, for example, calculus. In this case, it would enter at 16 hours. But if I will use a multiple line logic, we are going to enter at 12 hours previously to this. So it's a huge advancement in this case. And yeah, of course, in the possibilities and in the scenarios, better said, that dominus is not going to be able to entry, then yeah, it's going to act normally just like before. So yeah, then as you may know, for the sideways, yeah, let's get on with it, it's step by step. So we can see the main settings from the calculus. These are the default ones that I was using for the ETH and BTC, and I'm not changing them. The main setting as well, that came from the swingy, in this case as well, these are the default for the BTC, and they are also working with the ETH. So in this case, it's telling us that 30% of our 35% of our indicators are going to tell us to go long, and in this case 70% are telling us to go short. As you may know already, in general we need much more confirmation for a short than for a long, unless we are in the bear market. Then we have, the sideways market, but honestly in this case, this is not going to affect so much because it's mostly related, with the calculus. So, if there is going to be a sideways from the dominus part, we are still going to enter normally with the calculus. However, I would like to keep these settings for now, on the default. Then a very, very important and new part, which this one I'm going to have to explain. So let's say you want to go for the different types of the risk management that we have. So in this case, this HHLL, it means highest high, lowest low. So for the long, we are going to take into account the lowest low bar, and for the short, we are going to take into account the highest bar. Don't worry, I'm going to explain you right now how this works. So let's say, for example, we take 300 candles. So you see, for example, in this case, for this low, our lowest low in this case, if I will go 300 candles in the past, you see 300 candles, it would be more or less around here. So it would be displaced from here. So we can see in this case we would have a 12-13% more or less take profit. So stop loss, sorry. So in this case, for example, if I would go there on the strategy and now I would want to activate the dynamic exit on the lowest low, you can see that we would exit here. So you can see that this difference which we have of 13 something percent is more or less the same like it's going to happen here. But yeah, as you may know already, we will exit on the candle close. So we set this take profit which is going to be of 13%. So once we overpass that 13%, which is happened here with this big candle, with this one, you can see we are going to exit. So yeah, this is more or less how it works for the long, and for the short the same. So let's take for example this entry from here. This one, for example, it can serve us as a line or something that is showing us, yeah, like for example this one. So you can see this entry that we have on the short, which is this one. So this entry on the short, it's on 54,500. So the same, I'm going to take 300 candles. So more or less 300 candles is going to be somewhere around here. But you can see the highest point that we have is going to be this one on 19 on 38. So this is going to be our take profit point. So from here, you can notice that if I go from here until here, more or less in this case, we are going to have a 70% entry. But you can see that on the 19, we close it with the low of the bar, but then we exit on the close of the candle, because this is how it acts always. So this is how this new system, you know, is going to work. This lowest low and the highest bar. It's very good, you know, to take the swing, the highest swing point, you know, for the low and for the high. With the terminals in general, I noticed that it tends to work much better with the short entry than with a long one. The main reason is that in general, the long entries don't care too much about the, you know, the channels points. Like, yeah, depends on the market, but we know that most of the times the market is raining, you know, bullish over its entire creation. So yeah, you are going to actually improve your win percent, you know, with this pack, and you are going to reduce or drawdown, but you are also going to decrease by a huge margin your net profit, because sometimes a position are going to go for 50 or 60% and you are just going to go 20 or 30% you will take from it. When you are going to have this period, this big you know, these big bullish trades. But overall, like for example, if you have a channel, or you know, like you have a limited movement within the channel, then yes, it's going to help you by a huge time. So it's up to you to understand when it's better to use it or not. But from my test so far, I can guarantee you that it's working much better for the short than for the long. Both the dynamic, any of the risk management. In general, I tend to keep long as it is. We exit and we entry, you know, based on the general condition. And for the short, I will explain now, you know, like you have multiple types that which you can do. So this would be our first system. This would be our highest high and lowest low. The break-even stop loss. So for example, in this case, I noticed that, for example, for the long, the 10%, it's a good value both for BTC and ETH. So in this case, what does it mean? So you know that in general we have very, very high swings, you know, from one place to another, and sometimes we need like a huge, I would say 10 to 20% in order to change the direction of the entry. So with this break even that we have here, if our position started to be 10% in profit, we are going to move the break even, we are going to move the stop loss on the break even point, on the entry point, and if we are going to close during the candle, we can either exit during that candle, or at the end of the candle, at the close of the candle, we can exit the point. So this way, saving us a little bit more, like for example, look the difference. So we would have, in this case, the total profit, it would be, oh, actually it's working even better in this case. Wow, okay, so, wow, maybe because of the calculus. Yeah, maybe because of the calculus. So okay, I'm going to remove it for now. Yeah, I said nothing. But yeah, that's the main point, we know, with the break even. But at least with the calculus, if I'm going to use only calculus, you can see the difference here. So with calculus, for example, you can see we would have 5,000%. If I will use the 10% break even, it's going to be 55%. But I believe in this case, it's not going to be suited to use the break even point, because we are going to use a multiple logic, and Dominus is much faster to react than calculus. So in this case, you know, it's going to help each other. Then the dynamic risk management, this one, it's already self-explanatory, and you know already how it works. If we have a certain movement, like for example in this case 8% against us, for example for a short, we would exit. If we have a 10% profit, we would exit, and stuff like that. This is, you know, this is the simple version that we have, the default version. And then, although here doesn't appear in the settings, we are going to have another point, which is going to be the long the dynamics exit based on the support and resistance. So in this case, this support and resistance is taken, I believe, from Auto, I think it was called. No, it was not this one. Give me a moment, sorry, I don't remember exactly which. Yeah, this one. So this is the support and resistance that I am using, you know. These are the default version, but inside of it, you know, I made some modification. But to understand, you know, how this support and resistance is working, it's taking into account the overbought and oversold level from the RSI and adapts them, you know, to the pivot points. It has no settings, that's why I like it, you know, because all of this is just for, you know, to make it more beautiful, or colors or stuff like that. So in this case, you know, I modified a little bit actually the settings inside of it. And this is more, you know, like for the short trades. So you can see that if I'm going to apply this scenario of using this short dynamic system with the SR, you can see that the winning rate is going to increase by a huge time. But also, you know, the profit is going to, it's also going to decrease by a huge time, because this type of exit is more designed for a short term than a long term. Because as you may notice previously, you know, from the sorry, from here you can see that the movements in general, you know, like for example this one, you would have a 6% movement profit, while in this case, for example, our total exit was 23%. Like, or for example this long, you can see that in this case we would have an 11%, while we exit, you know, at 35. So yeah, it's nice to have it, it's nice to complement it, and especially, you know, if you want to use with a shorter time frame, I believe it's going to work amazingly, you know, with that. But yeah, from my own test, what I like the most is the one based, you know, on the highest high and the lowest low, which is this one. So yeah, we have this as well. So last parameter that we have, in this case, you know, let's assume that you want to make a partial exit. So in this case, a partial exit, for example, look at this one. Let's say we put a 50%. So let's take this position here. That's a good example. You can see that in this case, our original position was 0.04 Bitcoins. And you can see that we exit first 0.2. And then with this one, when we are going to make this exit here, we are going to exit the other 0.02. 0.02, yeah. So in this case here we exit half of the position and here half of the position. So if you would make the average, instead of exiting, for example, in this case with 31% directly, you would exit initially 16% and then you will exit the 31%. So in this case you are going to reduce your general profit, as it can be seen here as well. But by doing this as well, like if you are going to do this stuff, you are also going to increase your win rate. You know, so it's normal. You are trading total profit, you know, for a more assurance and more stability in the trade. So yeah, this, you know, like in general, you know, that I like more, you know, higher risk ratios, you know, risk reward ratios. So in this case, for example, with this type of setting, you can see that our risk reward is going to be 3.3. Well, the average is going to be 4. We have a 3.3 for the long and 4.8 for short. So we have a 50% almost win rate, you know, with 3%, with 3 to 1 on the long, and we have almost a 5 to 1, you know, with a 40% for the short. So I'm looking more for the bigger trades, winnings, you know, and smaller losses. So, but in this case, for example, let's say you would want to make this one, you know, even better. So, for example, you can see we can increase the total profit, you know, by 10% in this case, by using, you know, both the dynamic exit from the support and resistance and the high low for the short. But also at the same time, you can see that our profit was reduced in half, you know. So in this case, for example, you can see that we trade that 40% win rate that it was we make it a 57, so in this case a 70% increase in the win ratio, but also we reduce in half our ratio. So honestly, it's kind of normal, you know. It's pure mathematics, you know, with all of this. But yeah, depends on the, I don't know. Some of you, you know, like to be more consistent and more safer, for example, and you can go with this one, while others have more patience and want to take the entire trade. But this way, you know, by incorporating this new system, I believe you can have a much higher possibility and range of possibilities, you know, in order to do with it what you want. So yeah, as I said, this is the default settings, you know, for the BTC USD 4 hours, and at the same time, if we go with ATH USD 3 hours, you can see now it works actually very good with 4 hours as well, but the default one is going to be for the 3 hours, just like the other one. So yeah, there you have it. You can play with the settings, but honestly, you know, I like to keep it as it is for now. I don't want to interfere with anything, at least for those two, you know, and just leave it as it is. It looks like in this case not doing anything, or what? For this short? Ah, no, sorry, because this is alert, of course. Yeah, because this is alert. Kind of for the strategy, we can see it. Yeah, looks like I forgot to eliminate this because honestly it's doing nothing, you know, on the alert part. But yeah, doesn't matter for now. But I will remove it when I'm going to make a new update. I'll remove this parameter from here because on the alert it's useless. So yeah, thank you all for watching, and yeah, if you have any questions, don't forget, you know, how to get, for example, this product. You can go on traderlive.com, and here, for example, you have all the information about it. Also, if you want, you can message me directly on the Telegram. You can open here, and you can join in the group or the Discord. And yeah, here you have the prices and all the other strategies which you have. But yeah, honestly, I would like to say that right now this is the most powerful one that we have, and the most stable one as well, which is very important. So yeah, thank you for watching, and see you next time. Bye bye.